Okay, hey guys, it's Rob. I just thought I'd have some fun here, show you guys ways you can trade using Fibonacci and Fib extensions. Uh, one of my, it's probably one of my favorite technical analysis tools to use with, especially with stocks and indexes. I used to do this a lot with Forex. However, Forex is infamous to just I feel like it just messes with everybody. They really mess around in the fib zone, so it's a lot easier to do with the indexes, and they're just much more cleaner. I think the fibs are often more used. But let me just kind of show you some of the tools and what they look like. That way it'll make more sense when I'm doing these on the chart. First thing I'm going to do here is I'm going to hide. I'm going to go ahead and hide the symbol here. You got two types of fibs. This is a Fib Retracement Tool. So I'm going to bring this down. Alright. Let me clean this up a little bit. We don't need the negatives. Okay. There we go. So what you're looking at here is the 0 and the 1. The 0 is where the line started. The 1 is where it finished. So think of it as 0 to 100%. And then in between are Fibonacci numbers. You got basically 382, 0.5, which means 50%. It's dead in the middle. And then 0.618. Those are the most common Fibonacci numbers. And these three numbers here are called basically the golden area. This is where the markets like to retrace the most. So if a market was to do a pullback, many traders would look for it to pull back within this zone right here, from inside of the prior trend. A Fibonacci extension is the same thing, but allows you to move the Fibonacci scale anywhere on the chart. For example, if I were to draw one on top of this, I don't have all the numbers listed, but if I were to take this to the side here, you can see it's the same scale. You have the 382. I got this 0.618 on there listed and the 1. But if I wanted to bring it somewhere else on the chart, it'll allow me to move that exact scale somewhere else in time. And that's called a Fibonacci extension. One of the things that I like to look at is equal legs. That would mean if a market moved, and so the market moves in legs and waves if you're an Elliott wave student. For example, if the market was coming down to this level here, to this 1, right, and then we had a pullback that went all the way up to here, to this 382, what we would look for then is the market to do an equal leg. So for example, it would look like this. So that would be an equal leg. And a Fibonacci extension can really help you find where an equal leg would be. So for example, if I were to draw this and brought it up here to the top of the correction. So my computer's running a little slow with everything running here. You can see down here this 1, that would be the 100%. You can see it is exactly 100% equal to the leg here on the left. Alright, and what we can do with these numbers is we can try to project and foreshadow where the market will go, where profit taking might be, or even possibly find some hidden support and resistance levels. Alright. One of the things I like to look for is, I love these equal legs. I really like to see the 618 level on an extension broken, and I'm really trying to find, if it breaks, I love looking for the little pullbacks to the 618, you know, like support and resistance, and then see if we can trade it as close to the 1 as we can. Try to take some profits on the way down, because nothing is science, and not all these work out, so you need to start, you know, if you were playing, say if you're in a casino, you want to start collecting as many chips as you can for the long run, right? But let's take a look at some of these on a chart. Let me just clear the board here. This should help. Okay. Let me get. Okay. So here's this is the S&P 500. This is a futures chart. This is what the SPY is being built off of, except this market is open almost, I would say, it's not a full day, but there is a period of time when it is closed. But everything's being made off of this market. You also have the MES, which is the micro futures, which is a much smaller contract. That is the one that I think most of us would prefer to trade. So this, I mean, futures are great if you just want to buy and sell contracts. You can get in, get out. Very simple to trade, unlike trying to sell stock, which is a lot more difficult to, especially if you're trying to short sell stocks and you need special type of margin accounts, etc. All right, let's take a look at a chart here. What we're looking for is you really just need to find waves, legs and waves. All right, a leg would be anything that looks like this. This would be a leg, and then legs are usually followed by some form of pullback, and then you end up finding your second half of the leg. All right, and this would be something you can draw a Fibonacci on. Now it is up to it is subjective to you, so you can actually get even more micro on this. You can look at this as this being your leg, if you wish. But what you're looking for is that pullback with follow through. Okay. Let me go ahead and take this off the chart. Everything I'm doing on here seems to have a lag because of the recorder going. My computer's getting old. Okay, let's take a look at a simple Fibonacci pullback. So you look for a leg, such as this, and then you're looking for a pullback to base a trade off of. And you can see right here it came down into our golden zone. This actually came right down here towards the 0.5. Now I did just do rough clicks. I can't tell you if it's exactly on the exact high or low and where this would fall in. But this could be a range that you would start looking in to get long. And as you can see in this scenario, it actually worked out. Does it always work out? No. But this time it did. That is a Fibonacci pullback. If I were to look at it from, say, over here and come down to this leg here, you can see where the pullback didn't go all the way. It actually went through the golden ratio. All right. So not always perfect, and I think it also depends on market context. So if you were trying to, the market is being bullish, these pullback zones could be a little bit less effective if you're trying to go against the trend. All right. Something you can play with. All right. Let's take a look at a Fibonacci extension. So you take a Fibonacci extension, and then you go to the leg, and then you can bring it over to the right, and then look to see how the leg will continue. Okay, so price came up, we drew our line here, and then we're looking at these zones here for as the leg would continue to rise to see if they would act as support and resistance. You can see as this one started approaching the 382, you can see how it started getting choppy, and then as soon as that level broke, it just exploded to the upside to the 618. All right. Okay, so let's see how can you find trading opportunities with this. Well, what I like to look at is let's look for highs and lows that are currently being broken. The first exercise you can do is just start drawing highs and lows of areas that may have been broken. Just highs and lows. Okay, so let's say we got this low over here, price came up, we actually broke up from this range. We can always see we broke up from this range, came up, didn't give us too much opportunity, but if you were to play this level being broken here, I mean, we could start to look at this little correction here. Bring it over, makes a miniature leg. All right. Price came through. This actually went all the way up to the 1.618 level, which is a very common level for trends to reach, especially long trends. That's where things get extremely extended and the market likes to pull back. But to be honest, this might not have been something I would have been able to catch, but I would have been looking at this 1618 level here. All right. So if you ever see that pop up on the chart and price is getting close to them, a great area to put in a risk to reward trade it's a little bit more in your favor based on the odds of price wanting to create a reaction at that level. And you could have traded it somewhere up in this level and start looking to get out down here around the 100% leg. That's how I would play it. I wouldn't do much more follow through because I personally, it hit an objective. It's a good time. For me, it's a good place to get out instead of just trying to hope that price is going to trend in a different direction. We had this low here that was broken. Then we can start looking for a leg to see where this could have gone. If I take the Fibonacci extension here, go from the high to the low, back to the high. Because we want to track the leg where it broke. If I were to zoom in here, this would have actually given us a tradable opportunity. You can actually see where price broke the 1. Price pulled back, gave you a place to enter to go short. You could have had a limit order sitting right here with the stop loss somewhere behind, and then you could have rode price all the way down to the 1.618 as a target. And as you can see here, you would have had very little time that you would have been in drawdown, and you would have been in profit most of the way down. So this is like an area that would have easily worked out. You could have, if you held the level, I mean, yes, it did come back to the 618, back to my favorite area to do breakouts, to come back to this level here. Would I have been able to catch this one? I don't know. This would have been great because you could have seen how much this leg extended and how fast. And markets, especially ones with this much volume, legs can't move that fast for very long without pulling back. And it did just that. You would have gotten yourself the retracement, and then you could have gotten yourself out down here around the 1. With it smashing through the way it did, we really don't know what happened in between here. These are 2-hour bars. This could have been bouncing up and down off of this 1 before it went through. So I probably would have gotten out here. Let's try to do another scenario. This low here was broken, so we could have used this as part of a leg. So if we come over here, we'll go to the high. We'll do the first leg so that we can figure out where the next leg would have gone or have attempted to. There you go. Right here, this is my favorite setup right here. You got the 618 where price broke through. Price came back to the 618 where you could have done a trend continuation and got into the market and then rode it down until it hit the 1. In between there, I would have started netting some profits here because you never know if it's going to hit the 1 or not. If you come in here, you can actually, you can do a Fibonacci retracement. Taking profits once it hit around here around the 50% mark, and then say take partial if you were in more than one contract, and then you could have rode the other contract down for the full profit. Or depending how you trade, this could have been that could have been an area for you to bring your break even. But do keep in mind, you see some of these wicks that popped up in here in between. You want to be real careful not to get yourself stopped out. Here we have this high here, which was finally smashed and broken. So if we did a Fibonacci leg over here, try to figure out how we were to trade this to find something. This is going to be a little bit more difficult, but you could start looking at some of the smaller swings in between. So these would be the smaller waves on a lower time frame. If we just pick the first one, so we got this first leg, price broke up, came through the 618, didn't really pull back that much, came up, looks like it went through the 1 area and tried to pull back to this area here to be the next level of support. Honestly, not a big fan of the way this set up for me. If I was looking at this, it would have been already broken this high here. I would probably been more in favor of it coming back just a little bit deeper. I mean, this wick here is promising, but I mean, let's be realistic. In hindsight, this chart would have looked a lot different at the time. We wouldn't really know this was coming up the way it was. All right, so that level may not have worked out the best for us, or it wouldn't have worked out for me. This is a very long leg. We could easily just come up here and then do a much longer leg. Bring that down. Make sure this is cleaned up a little bit. So I just found a little high and low. So price came up here, so you can see how it actually started to move around the 382, broke up and hit the 618 level, where price did find resistance, and then it came and dropped and found 382 for support. This would have been a great area to go long if you were able to catch it. Price came right back up and hit the 618 level, where you could have taken some very nice profits. If you were doing the ES, these are the kind of profits that would make your week with this amount of points, especially on a 2-hour chart. It's that leveraged. However, like I said, there is a smaller product for you to trade that, for the amount of contracts that we trade, is extremely liquid. I'm going to go ahead and show you this. This is the micro ES, which is MES. So here's our micro ES. It is the exact same chart. All right. There we go. This is what we were looking at before. Exact same chart here. All right. So you're able to get in, put some very tight stops on these fib levels, and start letting your risk to reward ratios really start to work out. All right. So what about over here? I mean, it looks choppy, right? But that's what Fibonacci's or extensions and waves are there to help you with, to ride the wave. Let's say, I mean, if you were to find 2 legs, one that I can see right now would be this large, what appears to be a very large ABC pattern. All right. So this is one large one here. This would be if price was to start breaking out lower to the downside. This area here is starting to get broken out over here. You can see it. That's when I would end up looking for this larger ABC. All right. You can actually see how price came down, started to break out, pulled back to my favorite level here, the 618, and then went straight down to the 1. All right. If we were to do, yeah, you can hear my dogs in the background. I mean, these are just really fun to play around with here. A lot of charting packages have Fibonacci extensions. If we were to bring this down, bring this up, here's another leg within a leg. Trying to get that pretty close here. Right here, 618 came out, came down. You can see where it touched and started to come down, and it didn't make it all the way down to the 1, did it? If I were to bring in this retracement tool, you can see that price actually did come down to the 0.5 level, and you would have gotten yourself here, or I would, if you're trading it this way, if you had more than one contract, you could have closed out some of your contracts, and then or moved your stop loss to break even, and at least gotten out of the trade. So different opportunities there. All right. There is another setup that I do want to share with you guys here. New trends, they love to create these small patterns at the bottom that look like this. And then they create their rally. All right. These are some things I like to look forward to. They're so hidden. They always sneak up on you. But when these breakouts start to happen up here, I know like in Elliott Wave, these are patterns that are often looked for. I think Wyckoff even started using these without having Fibonacci numbers. But these waves here have like long-term predictions. Let me move this one over. So for people who are trying to catch larger trend reversals, here's the one. The trend reversals start to happen at the 618 levels, the 2 618s, 3 618s, etc. You can actually see how this ended up getting kissed over here. And then we had actually a very nice drop. These were areas that funds could be looking for to take profits at, etc. Just keep in mind, look for these little spots down here at the bottom for Fibonacci extension to draw your fib levels off of. All right, just wanted to show you that pattern. This is something you can play with. Again, a lot of this would be subjective. Would you have caught that top? Probably not. If I was long and somehow rode this thing all the way to the top somewhere, I might consider, hey, I might want to start taking some profits up here. Maybe. Good levels to take profits at. Looking for entries, I don't know. I don't know if you'd be able to catch it or not in reality. Let me do one more Fibonacci extension here. I'm going to go from here. That's a retracement. Well, that retracement went to the 618 right here. But let me, I think that was actually backwards, believe it or not. But let me get this. Do an extension. Just looking for legs and waves. There you go. Let me take this line away. Right here, you had the 618 get broken. Price pulled back. And then it was able to go up here to the 1. Also, you had this area here. This did not work. Okay. So this would be, for example, if losses happen, right? Things don't always work. When you get the signal again, this is what sometimes separates good traders, is you take it again regardless of the fact that you just lost some. If you're doing proper risk management, you should be doing, for example, more than one reward for what you risk. For example, if you took the trade here and your profit was up here towards the 1, you want at least 2R, which is, I'm looking at that number in the middle. Pretty close. It was 1.98. So your stop loss could have been down here, and then you would have been able to make 2 times your reward by riding it all the way up here. So as you know, if your reward is greater than what you're risking, over time, that reward will outweigh your losses. It's just simple statistics. All right. So these are very simple ways, like I said, that you can use Fibonacci's. I prefer Fibonacci extensions because less people are using them compared to Fib extensions, believe it or not. So I favor them. They've always just worked out best for me. Here's a Fibonacci retracement tool right here. You can see this whole run. Price came up. Like I said, I think these numbers are in reverse. And there should be a reverse button. Yep, reverse. Let me switch that around. This went to the 382 level for a retracement, and then price ended up continuing its trend. So that's the retracement tool. Wanted to at least throw that in there. All right, well, I hope that helps some people with Fibonacci extensions, ways that I look at them, ways that I use them. This was fun. Gave me something to do. My house is completely empty as the movers came in, and I was able to buy some time while we're waiting to finish this move. So, all right. Well, I appreciate you guys. Take care.